Dear viewers, NRI Money Clinic is growing day by day. Today we are taking a big step. We are moving beyond the shores of India now. We are in our journey to help NRI community which is located in specific countries. In today's episode, we are going to discuss certain problems faced by the NRI community which lives in United States of America. And to do this, I have brought to my studio a prominent guest. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but practicing financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, we here at NRI Money Clinic are trying to solve many of the problems faced by the NRI community. We are in a position to solve the problems faced by this community here in India. But our NRI community has lots of questions, lots of problems in the countries where they are living. If you are a professional who is working in US, Canada, UK, Ireland, Eurozone, Singapore, Australia, Japan, Hong Kong, China, or any other countries where you have an NRI community, you have a chance to appear on our channel. If you are one of the professionals, chartered public accountant, a tax specialist, financial planner, or advisors in any other financial field, then probably we have an interest in you and you get a chance to appear on our channel. If you are interested to appear on our channel to discuss the problems faced by the NRI community in your respective countries, please send us a WhatsApp message on the number shown here on the screen. We'll get in touch with you and we explore the possibilities of associating with you.
Dear viewers, tax saving is a big burden for many people. It's not something which is different for NRI community which lives in different countries. Everybody keeps looking for instruments which can save them the taxes. And today we are going to talk about the tax saving instruments which are available for NRIs who live in United States of America. To talk about this subject, I have brought to the studio my eminent faculty, practicing financial planner from Indiana State in United States, Mr. Samuel Fry. Mr. Samuel Fry is a fiduciary financial planner. Mr. Samuel Fry has to his credit serving clients ranging from students to high management to including the directors of Fortune 500 companies. It's just not that he is an individual financial planner. He works with a team of financial planners, helping his clients, particularly the NRI community, spread across the length and breadth of United States in their international investment requirements. Welcome to this show, Mr. Samuel Fry. The NRI community in United States is a big number there. You have been working with a lot of NRIs, people who are high net worth individuals, people who are in prominent positions for so many number of years now. One of the things our audience always keeps asking me or asking for guidance is, what can they do to save on the taxes and get some good retirement income by doing these tax saving instruments? What are the instruments which are available for NRI community in this direction?
Wonderful question. I am an Uncle Sam, and yet Uncle Sam here in the United States, often referred to as the tax man, is not my best friend. And so this is a question that is very common within our client base. Some of the options available happen to range from complicated estate planning, insurance planning, but most frequently our clients, we address retirement planning. And that is using retirement accounts such as 401ks, Roth IRAs, and traditional, what are referred to as brokerage accounts. It is a combination of these tools that often provide the retirement income needed for our clients, and figuring out the strategies on tax management for distribution is one of the most important topics that we discussed.
You said about this 401k account. Can you briefly tell what is this 401k account? How much money somebody can invest on 401k accounts every year, and what kind of a tax benefit they get out of this 401k?
Wonderful question. So there is essentially an investment scheme provided by employers here in the US, and they allow for their employees to contribute before paying taxes up to $20,500 per individual. And this money goes into these accounts, and it is then tax deferred, meaning that no taxes are paid upon putting the money into the account. And as there are gains on this account, and as the account value grows, no taxes are owed until distributions are taken from said account past age 59 and a half. It's a wonderful tool for helping people save taxes today, but also reducing tax payments as the account grows over the next 10, 15, 20, and 30 years. It's a wonderful resource that nearly the entire population here in the US uses, and is a wonderful tool for all planning purposes.
Okay, so as I understood, so anybody can put about $20,000 into these accounts, and these are deducted from your taxable income. That means what you pay into 401k need not be considered for your income of that particular year. It has to be kept inside 401k till 59 and a half years when the distribution starts. And all the capital gains which happens during this particular period is tax-free, whereas subsequent to that, these will become taxable during the distribution phase. Is that correct?
Absolutely correct. That's the perfect explanation.
Right. We have also heard about Roth IRA. Is 401k and Roth IRA accounts, it's one and the same? If it is not, can you tell me what's the difference between the two?
The major difference between Roth and 401k accounts lies in their tax treatment. Traditional 401k accounts contributions are made pre-tax, meaning that the money invested doesn't have taxes on it at all. However, Roth accounts, which can be provided by employers, which is a little more rare than a 401k, not every employer provides it, but everyone has access to a tool called a Roth IRA. That is once again, a tool where the money goes in post-tax opposed to the pre-tax of the 401k. As money grows, there are no taxes incurred upon the account. And when funds are pulled out in retirement, rather than having it be taxed as income like the 401k, the tax benefit that you receive is that it is tax-free income no matter the amount value of that account at that time. So you could theoretically take hundreds of thousands of US dollars or even millions of US dollars, have no taxable income, both in the United States and in India. Thank you to the tax treaty between the two countries.
Oh, you mean to say Roth IRA and 401k are entirely different instruments which are available? In case of Roth IRA, you mean to say that any amount of money can go into this tax saving instrument, but it should be post-tax paid amount. So that means I have 100,000 USD as my income. I pay my taxes from the residual amount, whatever I'm left with, I can put any amount I like in Roth IRA. And the best part of Roth IRA is that when they mature during the distribution phase, the income is not taxable, which is in contrast to 401k accounts where the income becomes taxable there. Is that correct?
The one change that I would make there, 401k accounts, just like the Roth, have the same contribution rules. So for the most part, if you can contribute to a 401k, you can contribute to a Roth. The only exception being that an individual Roth account, meaning one not held by your employer, has an income threshold at which you can contribute. There is a complicated way that you can still make contributions. It's a little more sophisticated, but in general, the contribution rules between 401k and Roth IRA are the same, meaning that if it's an employer-sponsored plan, you can approximately contribute $20,000 per year, versus an individual plan is about $6,000 per year per individual.
Okay. When you explain these things to me, one of the things that came to my mind was, is it possible for an individual to know all about this at their own level, or it makes sense for them to get hold of some fiduciary financial planner to explain them the benefits of this and find out what is suitable for them, or is it one size fits all? What exactly is happening on the ground there?
All of these tools explained are wonderful tools, but what we have found and what math holds true is that every situation is unique. For the NRI community that is planning to return home, one strategy is a significantly better strategy versus an individual who may spend 10, 15, 20 years in the United States might have a strategy that's completely different. Ultimately, it is very, very important that you consult with a professional that can help explain these strategies to you, because ultimately performance inside of these accounts is not the major driving factor. All things equal, if you can save money in taxes, that is money that remains inside of these accounts that allow you to experience significant more value over time.
That's a brilliant piece of information, Mr. Pryor. I keep often telling to my clientele that a tax which is saved is a return that you have gained without much of an effort, and everyone has to make that effort. There is countless NRIs who want to come back to India. They have their 401ks and they are worried about the tax structure of these distribution phase income that they get. What happens to that when they come back to India? If some financial planner can solve this problem for them, strategize to them and show them that they can save on the taxes, that would be a great tool. Thank you so much for this piece of information. I will be showing your WhatsApp number here on the screens. If any of the NRI community which lives in the United States, if they are desirous of getting some assistance, feel free to reach out to Mr. Samuel Fry. He is located in Indiana State in United States. If it doesn't come under him, he will probably guide you to fellow teammate who is working with him, who has the requisite licenses and the authority to practice in the place where you are. Again, thank you very much, Mr. Samuel Fry, for that awesome piece of information. That's a great help to NRI community. Look forward to have you again and again on our channel and discussing the different problems faced by the NRI community. Thank you very much for showing up here, and it's indeed a great honor to have you on the show. Thank you.
Thank you.
Dear viewers, hope the video that we have done today helped you to understand the benefits of 401k accounts and the Roth IRA. If it helped you to understand the final points of these two plans, and if it helped you to understand how you can optimize your tax outgo, please like this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your fellow NRI accounts living in your country. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic in yet another video very, very soon.
Press the bell icon for more details and subscribe our channel.